What is going on, traders? Welcome back to the Traveling Trader. Happy Wednesday to you. A historic couple of days in the stock market. However, the question remains, have we found a bottom? Is this the market bottom? Is this a time to start loading up on stocks? And I'll go through some data today and some analysis as to what I think about whether we found a market bottom. Of course, most of this is spurred by the $2 trillion stimulus package that was agreed upon last night and has yet to be voted on, but the agreement is there in principle, and the expectation is that it passes. In terms of the virus, at least here in the US, things are just getting worse. They're ramping up. Countries such as Italy and China have had a head start on the US, and the US is now seeing the apex of it, or at least a run up to the apex of the virus outbreak, right? Things are just getting worse. New York is getting hammered. And of course, we are not fortune tellers, so we cannot tell exactly how long the ramifications of the viral outbreak and the effects that it's having on the economy, how long that's going to last. Nobody can tell, but that will also play into our analysis. So stay tuned, and then I'll go over Bitcoin as well. All right, so let's kick things off talking about the markets. You see here, the Dow's up 5%, S&P up 3, almost 4%, NASDAQ up 2%. The gains were even more astronomical yesterday. And all things aside, when markets are one directional, they are the easiest to trade. And I was actually surprised that the government didn't halt things such as shorting. If you follow us on the trade alerts in the Discord, you'll know that we've been largely short on the markets, and for good reason. I mean, this is largely a one-directional move with a few green candles sprinkled in. And on Monday, I sent out an alert that I was going to play the expected stimulus bill this week, right? Not knowing if it would pass Monday or Tuesday or Friday or even the following week, but I knew that it was upcoming and that this downfall was getting exhausted here. So on Monday, I did send out an alert to start buying major blue chip stocks such as Microsoft, Amazon, Nike, which is up 20%, Visa, which had a crazy day yesterday, I think up 15% in one day, etc. But then I was also buying a Jets ETF, which this follows the airline industry, because the airline industry was one that was going to be included heavily in the bailouts. So I bought Jets ETF, which is up, I think, between yesterday and today, about 30%. And then I also longed the SPY, which is the ETF that tracks the S&P. I did a call option spread on the SPY, which netted us about 70%. So did I do all of that because I think that this is the market bottom? No, it's only because of the expected stimulus bill that I knew was upcoming and would give the market a boost, right? When the market starts tanking like this, it looks for any reason to have a couple of green days. Even if you look at the 2008 financial crisis, we had weeks that ended up, 10% gains or 13% gains in the market on the way down. Sign up to the trade alerts, by the way, if you want access to them. You get stocks, options, crypto, etc. So let me just play a clip here by our dear friend Jim Cramer from Mad Money talking about market bottoms and how the historical bear markets have figured into this conversation. So let us kick things off, and I'll comment on it after we play this short few second clip here.
Surveying past bottoms, DeMark points out that in 1974, 1980, 1987, 2001, 2011, 2016, each bottom had a secondary test. In other words, we bounced from the lows and then came close to revisiting them, which would mean we would roll back what happened today. Based on the history and the current setup, DeMark's expecting that we'll be stuck in the trading range like 2011, averages bouncing off yesterday's lows before retesting them down the line. You know what? I think that kind of fits, as we have at least another couple of weeks of very bad news on the coronavirus front. Hey, maybe it won't take a lockdown of 30 days. Maybe it takes a lockdown of 15, but then maybe there's another wave. You know what I'm talking about. Yesterday, DeMark and his team told me they were looking for a 10 to 15% bounce during this period. Crucially, though, they expect the bounce to be temporary, and that's the emphasis. Boy, were they ever right, just so you know. He had this call yesterday. There's nothing I can do. I was jammed yesterday. The down was horrible.
All right, so he starts rambling off there in the end. But yeah, he's basically talking about he's talking about Tom DeMark, by the way, the guy who created a lot of the indicators that we use today, including the TD sequential, which I will use in my example today, based off of the reference that Jim Cramer is making. However, he was saying that the bounce was expected this week, parroting the sentiment of Tom DeMark, because he apparently thought that we would have a bounce this week as well, a 10 to 15% bounce this week. The S&P's up, about 4% today and about 10% yesterday. So yeah, 10 to 15% bounce on the S&P as well as the other indices. But he also said that in the previous bear markets, right, and he referenced 1987, 2008, etc., that in the previous bear markets, we had a retest of the lows. And I watched that entire segment yesterday. He also talks about the 13 count, the TD sequential 13 count, which I won't go into today. You can do some research on your own, but basically that in the last, in 2011, when we had the debt ceiling crisis, the S&P hit a low, retested it a few times, then hit that 13 count, that TD sequential 13 count, before finding a reversal. And that hasn't happened yet on the S&P here during this bear market. However, on the Dow Jones, it has happened. We see the 13 count here occurring on Monday's candle. And that 13 count was also present during that debt ceiling crisis in 2011, when we dropped just shy of a bear market. You see the 13 count happen. Same thing, similar thing that happened on the S&P before seeing a reversal. So Jim Cramer, quoting Tom DeMark, is saying two things: that one, the S&P still has a little bit more room to drop because we haven't hit that 13 count yet. And second, and more importantly, that we will likely see a retest of the lows. We also have a couple more weeks at least of negative coronavirus news, unless somebody comes up with a miraculous antiviral medication. However, New York, like I said at the outset, is just getting worse. The numbers in New York and in the U.S. As a whole, the numbers are just getting worse. And remember that the stimulus is just that. It's a stimulus. All of these, virtually every single industry, except for a few, being video streaming because everyone's stuck at home, healthcare, and toilet paper. Really, there's just a few industries that are still operational and are even, their revenues would be elevated during a time like this. However, virtually every single industry is going to be seeing no revenues because everything is closed, right? So yeah, you get a stimulus bill that might help push you for a few months, help you pay salaries. However, there are no flights, there are no cruise lines, cinemas aren't open, restaurants aren't open, retail stores aren't open, right? It's just a complete halt of life. So in my view, I don't think we can see a true reversal when there are no revenues coming in, just based off of stimulus dollars alone, right? Especially if this thing continues for 2, 3, 4 more months. There's going to be a lot more hurt. So at the minimum, I do think that Tom DeMark, along with Jim Cramer, are right that we will see retests of the bottoms here at least. Also, if this thing stretches out for a couple more months, just imagine all the jobs that'll be lost, right? I mean, I've seen some of the predictions that analysts are making depending on how long the ramifications of the outbreak last. And, we're seeing insane unemployment numbers, potential unemployment numbers, leading into the summer. So for those of you that aren't following the alerts and you feel like you've missed out, in my view, and in a lot of professional folks' views, I don't think that this is the market bottom and that we've seen a reversal. Again, we're not fortune tellers, so if something in the landscape drastically changes, such as a new antiviral medication found or just a complete disappearance of the virus overnight, I do think we will go on to test these lows. And that's why I'm taking profits anywhere I can in this market, right? Anytime I'm up, we're taking profits. So companies that we bought, like Nike, Visa, etc., the intention was to get in at optimal levels, right? Start buying in for the long term. However, we saw those companies do 20% days over the last couple of days. So of course, I'm not going to leave those profits on the table, and I'll be setting tight stop limits to take profits. And if the markets do fall again, I'll re-enter at those same optimal positions and even potentially lower positions, which will be more optimal for the long run. All right, let us go over Bitcoin. So speaking of Bitcoin, Bitcoin has also been one of the easier things to trade lately. It seems to be tracking the equities markets, right? So what we've been doing in the short term really is playing the futures market against Bitcoin. So the equities futures market, the stock futures market, you know, I've been checking it at night at around midnight Pacific time. And if futures look like, you know, if futures are up and it looks like the stock market is going to open in the green, then I'll put in a short-term long on Bitcoin and vice versa. If it looks like the markets are going to open up in red, then I'll do a short on Bitcoin. And that has actually worked really well. There seems to be a leading nature to the stock futures where it's almost like they're telling the future on Bitcoin short-term moves here. However, futures aside, let us take a look at Bitcoin's daily. You'll see that it is basically pushed up against this 21 EMA here on the daily. You see the death cross looming on the 1 day, which is not a good sign. Bitcoin has been continually rejected at the 21 EMA. And like I said, it's been following pretty much the stock market. So the days that you see red, the stock market has been red. The days you see green, etc. And this big drop here was when the markets had a 10% drop in 1 day. Bitcoin dropped almost 40%. This was back on March 12th. Seems like an eternity ago, but was only a couple weeks ago. So what we're seeing now is there's a heavy correlation between stock traders and crypto traders. And there might be a big overlap, meaning people who trade stocks also trade Bitcoin. And I've even pointed out to this long-term correlation between the S&P and Bitcoin. Let me see if I can find it here. Yeah, if you look at Bitcoin here, you'll see this is the orange is the S&P and the main chart is Bitcoin, but you'll see how they've really tracked each other. And we've talked about, you know, after the halvings, Bitcoin gradually rallying, but you know, because we've never seen, there's never been a bear market in the stock market while Bitcoin was trading, right? Because the last real bear market we saw was in 2008, 2009. And Bitcoin really just started trading on the exchanges as of, I want to say 2010, 2011. But even then it wasn't as big in terms of volume as it became later on after 2013. So anyway, all that's to say that how do we know that the rallies that Bitcoin has seen after the halvings weren't also due to the fact that the markets themselves were rallying, right? We don't really have that much history to create a major separation between Bitcoin and the markets. And yes, they'll move disproportionately at times, right? So sometimes the markets will drop more than Bitcoin, or Bitcoin will drop more than the markets, but the trend is generally there, right? Even here in 2018, you see both the drops in the market and in Bitcoin. So, you know, if it'll just be hilarious that you know, by summertime or close to summertime in May, when we do get the Bitcoin halving, if the news of the virus improves and the markets start rallying again, then we'll likely see Bitcoin rallying again, and you won't know if it's because of the halving or because, you know, the markets are now rallying again. But there seems to be a really heavy correlation, and we've proven this time and time again with the short-term trades that I've been sending out on the trade alerts. Every time that the futures are up, you know, I enter a short-term Bitcoin long before going to bed, take profits with a stop limit. If the futures are down, I'll short Bitcoin before going to bed, take profits using a stop limit as well. In the mid to long term, I do think if, you know, the markets tank again, you'll see Bitcoin get rejected here at the 21 EMA. And now that the stimulus bill has been agreed upon, we might get a rejection of the market soon because there is no other good news to go by. And like I said, the positive effects of the stimulus will probably be temporary, and we will likely retest bottoms on the market again. And I think that Bitcoin will, you know, maybe not retest this 3,900 bottom, but we might see a $5,000 Bitcoin again, which would give us the opportunity to load up for the long term. Anyway, Anyway, that is it for this video. Go ahead and subscribe to the trade alerts if you want access to the options, stocks, and crypto trade alerts. Our portfolio is up over 100% since the market started tanking, right, through the use of shorts and bearish options. If you ever wanted to learn how to trade options, it's also a great resource to start learning. And to take it to the next level, you can sign up for one-on-one training with me. I only take a handful of people every month. Slots go fast. So if you do want to sign up for the next month, hit me up on the Discord. Subscribe to the channel, hit that notification bell. If you get anything out of this video, leave it a thumbs up, leave a comment if you have a question, agreement, disagreement, etc. Stay safe out there, traders. Peace.